Hello and welcome to this week's live weekly trade plan, where we go through the financial markets and we look to identify weekly and monthly levels of support and resistance that we're going to be looking to use in the trading week ahead. But just before we begin this webinar, I would like to present a very exciting opportunity to you personally. So the Live Trade Room has been set up to offer traders comprehensive trading education, but most importantly, daily mentorship. So our traders can join us for 1 hour per day where we analyze the financial markets, we look to identify trading opportunities, and you can observe us trade our own live trading account. So the idea behind this is that you'll be able to get full access to our trade details but most importantly, our trading performance. So I'm delighted to say that we are currently accepting applications for places on our Trainee Traders Programme. Now please do click on the link below if this is of interest to you, and you can find out exactly what's involved and what we're offering. Now for a limited time only, if you are successful in your application, we are going to be waiving the fees associated with a place on our trainee programme. So there is zero cost associated with a place, and there is no potential for upselling or anything of that kind at any point. So this is a genuine opportunity, however it is subject to normal terms and conditions. So what we are looking for is genuine traders that are genuinely interested in learning how to trade the financial markets. So if this is of interest to you, please do click on the link below, do submit the relevant form, and one of our traders will be in touch with you over the coming days. So for now, relax, enjoy the rest of this webinar, and we look forward to seeing you soon. Bye for now. Hello everyone, good evening and welcome to this week's live weekly trade plan. My name's Tim and I shall be more than happy to take you through tonight's webinar. So for those of you that perhaps are new to joining us during this webinar, and I can see there is a few of you that are new to joining us again this week, so I just want to extend a very, very warm welcome to you all. Hopefully you'll really enjoy and benefit from this particular webinar. So just to give you a bit of an insight, it's really all about multi-time frame analysis. Obviously the markets are closed, and that's actually quite an important thing because it just allows us to take a step back, take some stock of what's happening as far as price action is concerned, and enables us to plan for the week ahead. So we'll be taking a technical look at weekly and monthly levels and looking to identify the highs and lows or potential genuine levels of support and resistance that we can use for the trading week, the next 5 days ahead of us. So as always, we'll be observing our main 15 liquid global markets, but we'll also be looking at other markets. If you would like us to look at any towards the end of tonight's webinar, we're more than happy to do so. So it is a little bit about, you guys posing and asking questions, or if you want us to look at other markets that you do look at on a weekly basis, then we're happy to do that in this particular webinar. Okay, so moving swiftly on then, please take a quick moment to become familiar with our risk warning. It's just very important you as a trader are fully aware of the risks that are involved, kind of embrace those risks. Yes, we're very diligent in our planning in terms of protecting capital. We're very accurate in kind of how we operate. But beware of those risks nonetheless. Okay, so I've touched upon the importance of multi-time frame analysis. Just to clarify a couple of points, some of the benefits of being able to look at different time frames, or higher time frames, should I say, is that you can see more clearly what's happening and who's genuinely in control of each market. Sometimes, especially with kind of the very choppy market conditions that we've been experiencing recently, with a lot of kind of fundamental based moves, then you sometimes you can get lost in whatever time frame you happen to be very familiar with, and sometimes it's just very, very nice to just step back and see what's happening on a bigger time frame, and it can often put things right in perhaps your own head when you're trading these markets. Secondly, the larger the time frame, the more important the genuine level of support resistance becomes. We'll actually see that this evening in terms of some of the weekly highs and the lows, and you can see how the market responds to those weekly highs and lows, which is obviously why we try to take a bit of a focus on those levels in this particular webinar. And then finally, it can also show you the important levels where a market is likely to move towards as well. So you can use these levels with regards to taking profit as well. So what we'll do now then is we'll get straight into the charts. If you do have any questions, guys, don't hesitate. Good evening, guys. Thanks so much. Apologies, I probably won't go through you one at a time, but look, you're all very welcome to join us, and it's good to have you on board once more. Okay, so let me get up the charts then, and we'll start as we always do with the dollar index. So basically, from last week, we were looking at a break above 93.44 would constitute a significant, and this was also played in line with our structural failure. So again, when we trade the markets, we look to identify as many reasons as we can to trade those markets. And we had a little bit of a structural failure to the downside, which meant this market was moving lower. And this is the sort of choppy behavior of these markets. The market bottomed out, which is our weekly low of 92.40. We get a bounce. This market creates a high in this market, and we try to attack and break this level. And because this level holds, it creates a bit of a higher low in this market, which is potentially the foundations of a reversal or a market which is no longer looking to move lower. So we identify this level as an opportunity to basically take this higher. Now, eventually, we got into this market on Wednesday, but we use a specific rule when we get into these markets, which meant you can see currently where our entry level is. It's just at this level for a very, very specific reason. And we had the following day, we had continuation, which is what we'd want to see. And of course, on Friday, with Friday's price action, you can see a little bit of a rejection or a little reversal. So now we're in this position where actually now we're likely to see potentially a little bit of a pullback. But ironically, that's what we would like to see happen when we see this candlestick, is for the market to organically pull back. But we want it to pull back to effectively previous levels of resistance, which then becomes levels of support. And if we can get this kind of price action where the market can effectively start moving higher, we can use this level here as a bit of a base to kick on from. So no need to panic just because of this one candlestick. When we trade markets, upward markets go like this all the time. And the same for downward markets. They just make they behave like that. So every time you get these pullbacks, they're not times in which, certainly when we trade daily time frames, we shouldn't be freaking out at these pullbacks, because as long as they're creating a series of higher highs, then you're in that market heading in the right direction. So just with that in mind, let me just take you over to the weekly and the monthly levels. So we had a nice bullish week. Now, from a weekly perspective, you would like to see continuation. So just because we got that one sort of reversal signal on a daily time frame, when we look at the weekly chart, you can see, hopefully you can see that there's plenty potential for this market to be squeezing up to $95 level, and it's currently at 93.81. So we're effectively going to work with this low to the downside. So the 92.40 is definitely our sort of continuation to the downside if this price decides to roll there. But certainly to the upside, we can quite easily move this level to the upside now. And what this might do is, well, two things. It might provide resistance to the upside, i.e. preventing price from moving higher. And if I just put a blue line just across the top here, you might see a little bit more clearly what I'm talking about. So we'll have a nice blue level in there. So you can see it's in line with these highs. So it clearly is a level of resistance. Even just 2 weeks ago, it was the high of that market as well, and it's the low of these previous markets. So it is a level that needs to be respected, but we would look for this market to continue pushing higher. Now, the market will do what it wants to do. But this is kind of our frame of mind when we trade, is that we want markets to expect, we have expectations of the markets, and we want those to perform with us. If they perform with us in line with our expectations, we want to trade those markets. If they don't sort of cooperate and perform to our expectations, then obviously we want to stay back and just stand on the sidelines even more. So the first level really is for this market to break the weekly high. And what that actually coincides with, and I'm going to just change this color to green. If I just take note of the high, is the 94.04. So let me change this, 94.04. So we'll turn that into our green level, 94.045. So now we have a level that can provide real resistance, real support, basically, if price gets down to this level, and also a level of resistance in there, which is beneath the major level of resistance, which is 95.02. A break above this on a weekly time frame. So when we apply sort of technical analysis, you know, you kind of want the bigger time frames to fall in line, because this is now a major structural level on a weekly time frame, and a break above that would be very, very interesting, because we'd be looking at these kinds of levels, late 90s. So potentially a couple of very, very interesting trades. And we have got in a, we've recently over the last week got into a few dollar-related trades, which we anticipating what's been going on in the dollar over the last, you know, 3 or 4 weeks, and you could argue since the beginning of the year. And let me show you what has happened for those of you that perhaps are new to joining us. Since the beginning of the year, this was you can see on the bottom left-hand corner here in the data window. You can see these highs. You know, they're all around this time last year, and the market simply rolled over to the downside. And what we've identified is these lows here as the potential for a reversal. So we've already seen one sort of fairly minor structural failure, this time to the upside, followed by a pullback. And the idea is that there is scope for this market to continue higher. And you can see the levels that this market can push to above that level. So definitely some interesting trades there. You know, it wouldn't be any surprise really between now and the end of the year, and perhaps the beginning of New Year, that the dollar starts to see a little bit of strength coming into this US dollar, and we're kind of on the verge of just positioning ourselves in that, obviously at a very, very low level. Now, what we always have one mind of is the fact that this market has, of course, the potential to start squeezing lower. But what we have is this kind of price action where the market has kept rolling ever so slightly lower, but at which point starts to progress and starts to push higher. And that's really the hypothesis behind this particular trade. Just on a monthly time frame, before we won't spend so long on the other dollar-related markets, but you can see the monthly, which you can see we've still got plenty of time left in this month. We're only a third through it. We're looking quite bullish after last month, which is quite bearish again. So there's plenty of scope to the upside is basically what we're saying. And what I suppose, just to let me zoom out again. So this is a monthly time frame. So we anticipate this level to be a major level of support, and we're buying the support. So anytime when you're trading the markets, if you're buying support and you're selling resistance, then you do give yourself an interesting opportunity to look to stack the odds in your favor. Now, traders trade the markets in a variety of different ways, but there is some incredible value to be had from that as just a very, very basic approach. So so we're quite happy with those levels then. We've got a weekly level 94. Let me zoom in for you. So 94.045 and 92.490. So with that in mind, or the potential for some continuation in a bit of dollar strength, we've seen a bit of dollar strength over the last week, this market moving lower. We've got a clearly defined level of support. So, you know, that these levels sit in these markets, and this could actually be the potential for. So when we first started looking at the dollar index, this is kind of the dollar index is kind of an inverted position of the euro dollar. So what we're saying is, what we can see with this particular chart is a series of higher lows. So there is potential for this market to push higher. Now there's a couple of levels of resistance, major levels of resistance at this level. So the idea is, if the dollar strengthens, we're likely to get a little bit of this kind of price action in the euro. And if the price pushes back to sort of 18 and a half, and it gives us an opportunity to take it lower, then we might be looking to do that as well. So this is where our directional bias comes in. What are we looking to do? Are we looking to buy this level? The answer for us right now is unfortunately not, because there's just too much resistance in this market in a relatively short pace of time. So where the value lies in terms of a trade, and it's kind of in keeping with our dollar index, is to capture a bit of a rollover to the downside. Now, we traded this market on a couple of occasions, took a couple of fairly small winners. We had a major sort of target that we were aiming for, which is 14.5, and we got within 100 pips of those, but we were up quite a little bit. But we had 2 days of just a complete blowout in this market. So we protected our capital, so there was no risk to the downside for us. But we were looking to actually get paid on a couple of these sort of fairly significant sized trades. But that's just the nature of trading the financial market. So once you've mitigated risk, you can adopt you can look to give those trades and markets a little bit more room. Now, in hindsight, and there was very significant reasons why we didn't do this, but we could have booked in significant profits a lot lower down, and look for this market to come back and look to try and capture it at a higher price. So you do live and die by the decisions that you make, but it was a part of our trade plan when we first got into this market. So you're constantly learning as well when you trade these markets. And so what we're going to be doing is we're going to be waiting for this market to hopefully pull back, and then if it does and it gives us an opportunity for this market to roll over, then we'll look to get into it to the downside. Saying that, the euro divides literally myself and the other traders here at at the live trade room. It's quite divisive in terms of some days we're quite positive euro, and other days we're not so much. So in terms of overall picture, what we've seen since July right the way to December is, for all intents and purposes, largely a sideways moving market. So we've had a break higher and we've had a break lower, but apart from that, we've literally had this price action moving sideways. So therein lies the skepticism. That's why we can literally move from one position to the other. But we're just going to sort of bide our time. There's no need to sort of rush or to panic in any way, shape, or form. So let's go through the levels to the upside and to the downside. Again, we're going to leave the high there, the 1960, but I do want to bring down the low. So 1729 is what we're going to put in here. 1729. So that is our weekly low, and our weekly high is the 1960, which is obviously below the 120 level as well. So are we looking to buy this market above that level? Perhaps not. Perhaps not. So we're just going to work with those levels and just try and be consistent as we can. There might be the argument for a buy trade, but as to whether we'll take it or not, I'm not so sure. So with the pound dollar is kind of in a very, very interesting position at the moment. You can see the bearish nature of Friday's price action. The dollar really strengthened against it, and it's one of those bearish engulfing candlesticks, which are normally very, very bearish indeed. And there's obviously a lot of flip-flopping going on with regards to Brexit and you know, the implications of the deal that was just agreed, and you know how that will carry itself forward to the trade talks. So there's a lot of bravado around. There's real politicking being played by all sides, and that is obviously very much likely to continue. In addition to the whole Brexit negotiations and the impact that might have on the British pound, we've also got the Bank of England as well, with the potential for rate increases, more likely in 2018, because they do have, the Bank of England do have a policy statement and rate decision to make this week. I think it's Thursday. It's unlikely. The markets are not expecting a rate hike, but you never know. And it'll be interesting to see what is in the statement as well from the BOE in terms of their interpretation of things and their approach to inflation and of course interest rates and what they should do with them. Okay, so from a technical perspective, we're kind of within our two ranges. So last week our high was the 135.48, and our low is down here at the 132.23 level. So there's definitely an argument to bring this level up, because you can kind of see the ascending line here as well. So what I'll do is I'll make a note of the weekly low in this market, which is 33.18. Sorry, bear with me. So 33.18. I'll just change this level in here. 33.18. So that level can go up, and I just move this level down a little bit so that can go back. Okay, so we'll work with this weekly high, and you can see how this week's high just kind of failed to break above it. So we're still, all we've done is tightened the range with the weekly levels to the upside and to the downside on a weekly time frame. So if this market breaks lower, yes, it's likely to come into a bit of resistance in here. If we get a nice clean structural failure, though, it might give us an interesting opportunity to buy the dollar against the pound, but we'll obviously we should wait and see on that one. Okay, so the dollar yen. So we have the dollar yen squeezing higher. We've got a nice structural failure above this level. So we discussed last week about the potential for a confirmed break above this level could constitute the potential to buy this market, but likely only up to 114.50 level. So, and the reason for that is this is the weekly high. We look at these two candlesticks. So this one in here and that one in there. So let's say that's candlestick 1, that's candlestick 2. So when we get this candlestick and it closes the way it closes, does that give us huge confidence that it's going to continue higher? Not so much from a Japanese candlestick perspective. And then the market pushes higher, rolls back over and closes at this much lower level down here. Does that give us confidence to buy it? No, it doesn't at that point. The likelihood is the market's going to roll lower. Now, the market bottomed out. And then we had one really explosive day on Thursday, followed by a second one. And again, we have this sort of Maribozu close, which doesn't fill us with huge confidence going into these levels of support and resistance. So it was just became a market that we were just going to just stand off, because we didn't see that this market really giving us the potential for risk reward to the upside, even though it's very, very likely to squeeze into these kinds of levels, the 11400 level. So we just decided to back off. We're in a couple of different dollar related trades. That is the dollar yen, and I'm going to just work with these highs and lows. Actually, I can bring the highs and the lows up. So the weekly high is 113.57. So 113.57, and the lows to the downside, we'll bring those up to 111.98. So I hope you see those levels on the bottom left-hand corner, 111.98. Okay, so those are our weekly levels to the upside and to the downside. Again, if we get a break above 113.57, are we interested in buying it? Probably not. And the reason for that is these highs in here. You can see all those highs. You can't see that line very well. But each time the market has got to those, we've just had this kind of rolling over, bouncing action. Is it likely to happen again? Very, very possible. So unless we get a confirmed break above this level, this is a really interesting level for us to take this market higher. Until that happens, we're just going to be nice and patient, just sit on the sidelines and just sort of watch and monitor what happens. The dollar CAD, this is one of the markets we decided to trade. We identified the weekly low of 26.65, and you can quite clearly see how this market has acted as support. We asked ourselves last week, is it likely to provide a bit more supporting of price? And the answer is clearly yes. You know, have we had an opportunity to sell this trade here with this one candlestick, 2, 3? So candlestick 1. This particular candlestick here is the only one that's close enough to potentially saying, yes, if this market closes beneath this level, we'd be interested to sell it. But that's not what happened. So we've had the price pull back a little bit above this level, and that's always a sign to us to suggest, right, well, now patience is required. If it closed, you know, at this level down here, it might have been an interesting candlestick to look to sell. But that's obviously not what happened. It closed where it was, so therefore it was off the table. We see candlestick number 2. Actually, this becomes really, really bullish. So we looked at this candlestick and we said, right, well, actually, we're no longer looking to sell this market now. You can clearly see the rejection to the downside. And candlestick number 3 struggled to close beneath that level as well. So were we looking to sell this market? The answer is no. Then we got the reversal moving to the upside, and we just took a safety first approach with our entry to the upside, even though this level down here was the primary entry level. We just didn't want this market just squeezing higher and just rolling over again, because at the time there was the potential for, you know, the Canadian dollar to strengthen and really close beneath these levels. So so that was just our thinking with regards to the dollar CAD. So we're in this to the long side, and I'll show you the potential to the upside. You know, all this market has done for 7 weeks is literally move sideways. So we still have our high intact. You can see how the market even last week bounced off this same level we've had for a while, 29.18 level, and the 26.65 has been really holding up this market as well. You can see how useful these levels are in this market. So a clearly defined break of that level would see a nice significant move to the upside, and we're already in it at a very, very sort of supportive level from a price perspective. You know, this is where price is clearly supported, and we're looking to buy this to take this longer. So if we get over the next week a clearly defined break above 29.18, we might even look to add to this trade and get into it at a slightly higher price, and look to see this market, you know, really move higher. So it definitely has all that potential. So all we're going to do is just move to the weekly low, which is 26.22. 26.22 to the downside. So all we've done is just moved our weekly low ever so slightly. Okay, so moving on then to the Aussie dollar. So this is your Aussie dollar chart, and it was such a shame. Sometimes these markets are just so volatile. We were selling this market, but we had our stop loss placed above the weekly high, and as you can see, I think it was Wednesday or Tuesday, we just had a little ever so brief sort of bounce above that level, And in these situations, unfortunately, you know, some you win, some you don't. Sometimes those levels really, really stack up. Other times, you know, it's a real significant level, a structural failure level actually in this market. And that's what we were really worried about. You know, we were not willing to entertain a trade above that level because it would have been the beginning of potentially a reversal. So unfortunately, this candlestick in here stopped us out for a profit before rolling over to the downside. So so that's just a shame. Okay, it was a profitable trade, so it's not all bad, but you know, it would have been more profitable at this stage. And even the weekly low now is just providing some resistance to the upside. So that's the type of trade you look to get into. So zooming in then, what I'll do is I'll go over to the weekly time frame, and you know, it's just a shame that this market just, you know, tweaked above those levels. So we're going to now take these highs and lows. So the high is 76.52, 76, 42, sorry, 52 it was. And to the downside, we are going to take the weekly low of 7,500. 7,500. So there we go. So those are weekly levels in this market, meaning if we get a continued break to the downside, there might be an opportunity to continue to sell this market. And if we get a bit of a reversal, we're going to have to be very, very patient. But if we get a break above 76.53, we might look for nice, interesting trades to the upside in that market. And just the last of the dollar pairs, the New Zealand dollar. This has been in a range-bound, sideways moving market for quite a while. You can see the weekly high of 69.43 and the weekly low of 67.79, and we're exactly in the middle of that market. So unless we get a confirmation either direction, we're going to sit on the sidelines and just watch and wait, see what happens. Okay, so the euro pound. We were actually buying the euro pound. This was a trade we took a small loss on, and only on Friday when the market broke lower. And then, as you can see, off the back of the Brexit, decision with Theresa May, and agreeing the terms of phase one, all of a sudden over the course of the day, the market sort of bottomed out and decided to reverse and actually finished quite strong. But again, just going back to kind of what market conditions are we trading, for all intents and purposes, it is a sideways moving market, and it has been since September. So September to December, you're obviously, it can become a very volatile, period of the year where markets are really sort of driving in one direction or the other. That just hasn't been the case for some of these markets. So we can only trade the conditions that we have to deal with. But the market has sort of made a new low. So that's quite interesting. And that's what we're going to work with. We're going to work with this on a weekly time frame. We're going to work with this new low in this market. So I'm just going to take this level. So the 86.88. $86.88. So we're still working with our 90.31 to the upside and our 86.88 to the downside. So 300 plus pip move while this market is moving sideways. So we'll let it do its thing. Again, another sideways moving market, and you can see how accurate these weekly levels, and the market is just bouncing between them and rolling up and rolling down. So unless something significant happens, look at it in the weekly time frame, we're just getting consolidation for quite some time. So those are the market conditions, and obviously knowing and understanding the market conditions, it's really important skill, I guess, for any particular trader to be able to identify what the market conditions are like. Yes, you might get one or two markets which are flying for various different reasons, but as a whole, you get a feel for how these markets are kind of performing. You know, the US indices are the markets that keep on giving, and we do have the 2658 to the upside and the 2596 to the downside. So let's take a look at this market on a weekly. So even the bit of a pullback that occurred during the week, has pretty much most of that has been bought back. So we're just going to work with these highs and lows. So 2665, so 2665 to the upside, and to the downside we're going to work with this low, so 2620. So 2620. So those that are expecting or thinking that, you know, these markets are in a massive bubble and that bubble could burst at any time, will have to just suck it up for the time being and just be aware and witness that these markets just keep increasing higher. But these are all-time levels. So we achieved a new all-time high this week yet again. And that's been the story for the whole year. So how long this continues, who knows? It could certainly continue for quite some time. So on a monthly, it's just continually moving higher, as you can see. So very, very interesting price action. Very difficult price action to trade because you're trying to get long these markets and you really don't get that many opportunities to do it. So that is the S&P, the Dow Jones. We just work with these new highs and new lows. So the high of this market is 24,533. 24,533. So that's the high, and the low of this market is 24,072. So those are the weekly levels to the upside and to the downside. You can see again, sort of the weekly highs are stacking up, and also the weekly lows are becoming a significant level of support for this market. In 72, 76, Wednesday's candlestick bounced off it exactly to that level. So if we have a look at this market on a weekly, you can just see some really choppy, you know, price action. Again, going back to, I suppose, again, we're talking about since June, you know, all right, it's threatening to break higher, it's threatening to break lower, but in actual fact, we're still at the same price that we were, even going back even further than that, sort of to February time. So and it's probably useful to just compare what's happened with the US indices compared to what's happening with the FTSE. Now, obviously, the political situation has been very, very different with the with the Brexit negotiations, and I suppose also the decision from the Bank of England to increase interest rates as well, and the impact that has had on the British pound, i.e., you know, pushing it higher. You know, and if that's the case, then the FTSE is likely to react by squeezing a little bit lower. So so that's the FTSE. Those are the levels we're going to continue to work with. Same again for the Nasdaq. We're going to work with the 64.28 to the upside, and you can see how useful this level has become twice this week. It became a significant level of support again in this market at 62.29. And these for intraday traders can be priceless bit of information. We do know, you know, many of you do get the opportunity to trade intraday as well. So they do have multi uses. The gold market, which was a market we were very interested in selling, we have been for quite a while, even though it continually edged higher. We eventually got the break to the downside, and you could see the volatility in that move. So we've captured it around the 1260 level. This market definitely has potential to squeeze lower. We are at this level of support, and it's a fairly minor level of support, but it's still a level of support. So we might get a little bit of a pushback in the short term, but we do expect now, looking, and when we look at momentum is very, very telling. You know, we can see the physical momentum in the market. So yes, we might get a little bit of a pullback. Yes, it might give us an opportunity to take this lower, perhaps at a higher price again, depending on what's happening. So so yeah, so far so good regarding gold. On a weekly time frame, we're going to remove now the 1305. No, in fact, we're going to leave the 1305 because it's such a massive level to the upside. It's a game changer for gold if it breaks above it, and that's why it's really struggled to do that. But we will work with a new low. So 1243.57. Oops, I didn't want to do that. So sorry, let me. So I'll tell you what, if I zoom in. I just want to make sure that I haven't moved anything in this market. No, I haven't. Right, so now I can move this level. So if I just make a note of the low, so 1243.57. 1243.57. It's important to obviously be accurate. 1243.57. So that's accurately that low. The high is very, very high away, but we wouldn't be interested in looking to buy this market for quite some time unless something structural, begins to change. So we just think that this market has a bit of room to the downside, perhaps to 1220, something along those kinds of lines, in line with these highs over here. So we're just going to watch this market and see what happens. Okay, so moving on then, last couple of markets before we finish up. Crude oil. So we identified the low last week of 55.56. We wanted the market to come back to that low to give us an opportunity to buy it. Didn't quite. We were the best part of the low, 55.80. So we were 24 points or pips away from this low, which would have been optimum, but we couldn't ignore what was happening for the sake of 24 pips. It was definitely worth getting into. So we took this market long. We are looking to take this market long to, I'll show you where we're looking to take it to, which is the $62 level, which is this level up here. And this little pullback just gives us that opportunity for this market to start reaching higher. It's in line with a lot of these highs up here. So the early 60s, this market has real potential to start squeezing higher. And that's why we wanted to get into this trade. So looking at the levels, a couple of significant structural failures to the upside on a weekly time frame. So let's zoom in. So we can leave the low to the downside. That is still intact, really. And we're going to leave the high to the upside. And what this high might do is suck in the price to that level. And if we get a break above it, it might be an opportunity to add to this particular market as well. A breakout trade above the $95 level. So we're going to leave those levels to the upside and to the downside. And just the last market. And again, there's not an awful lot to change really with this market. So again, last week's low was really supportive of this week's price action. It could not break lower. So we've had this little pullback, which again retraced, more than 50%. So you would like to think that this market is probably going to start moving lower. So, hopefully you can join us during the week and see if there's an opportunity. to sell it between 123.91 and 122.60. If it gives us the opportunity to do that, we might look to take it. But in terms of weekly levels and monthly levels, and you can see what we're doing, the market is coming from this sort of price action. So we're just anticipating this market to just squeeze lower below those levels. So let's see if this market is capable of doing that or not. Okay, so as you can see there, a lot of those markets, there was not much to be changed really to any great extent. A bit of tweaking, but that's probably been about it. If you'd like to follow us on our public Facebook, Twitter, and LinkedIn page, you're welcome to do so. Just search for the Live Trade Room. You should be able to find us. Any questions, guys? Please type into your chat box, which you'll locate at the right-hand corner of your screen. Or for those of you that would prefer to email us, please do at support@TheLiveTradeRoom.com. We would obviously get back to you as soon as we can. So on that note, guys, I'm going to give you some, I'm quite happy to stay online for a few minutes. Those of you that need to shoot off, thanks for joining us as always, and hopefully you can join us during the week. We've definitely got an interesting, we're in a number of very, very interesting trades at the moment, and we were anticipating with kind of the nature of the way that the year has gone. We thought, I wonder if this year is going to actually fizzle out a little bit with not much going on. And in actual fact, there's some very, very interesting moves that we simply can't ignore. So if the market is going to give us some movement, then we would like to capture it, specifically because the last 2 or 3 months have been, I'd say, a little bit on the disappointing side from follow through, from market conditions perspective, a little bit on the frustrating side, but that's really not a problem for us because we've got all the time in the world. We look to trade these markets, putting in an hour a day to trade these markets. So, if the market wants to operate in a way which is, quite sideways moving and a little bit on the frustrating side, then we let it do its thing. So we're not capable of doing anything else, but we are capable of just biding our time and waiting for those, higher conviction trades to start kicking in. Okay, so just having a look through the comments, guys. My pleasure. Thanks very much for joining us. Don't seem to have questions as such. Great stuff, Bill. We'll see you tomorrow evening. Thanks for joining us. So Connor, you're just saying your WTI chart only shows January. That perhaps shouldn't be the case. So if you're talking about crude oil, it's only showing you January. I don't know. Are you looking at some sort of future sort of contract or something? Yeah, okay. I'm not sure why that might be the case, Connor. Perhaps you might want to drop me an email tomorrow when you're free or something, and I can sort of have a look into it. Would that work for you? Yeah, great. So just drop me an email tomorrow afternoon. Actually, anytime tomorrow afternoon or evening will be fine. I'm a little tied up in the morning, but anytime after 1 o'clock would absolutely be fine. And hopefully we'll get that sorted out for you. So it's obviously something not great there. So yeah, I can see Tatiana as well is suggesting that it just says January. Yeah, take a screenshot if you can and just email it to me. And it sounds like it might be a data or a price feed issue. If that's the case, I'll get it sorted out super quick. So drop me an email, send me a screenshot of it, and I'll get it sorted out. I'll probably be able to get it sorted out in the morning, especially if two of you have the same issue. So Yeah, so put that information, please, if you can, in an email, and I'll get it sorted out for you as soon as I possibly can, and we can touch base tomorrow afternoon as well. And Tatiana, I apologize. I was supposed to contact you on Friday evening, so apologies for that. But I'm sure perhaps we can catch up again tomorrow. So do let me know whatever time's good for you, and I promise you I will get back to you on that. Yeah, my pleasure, Connor. Sorry about that difficulty, but look, I will sort that out for you, whatever the issue might be. I'm not too sure what it is just yet, but we'll get to the bottom of it really quickly for you. My pleasure. Okay, guys, on that note, I don't think there's any more questions. My pleasure. Yeah, fantastic. Okay, that's great, Tatiana. So look, it worked out well then in the end. So look, we'll touch base tomorrow, and we'll get that sorted out for you as well. So on that note, guys, thank you very much for joining us. Do take care, and we'll look forward to hopefully you guys joining us during the week. So from everyone here at the Live Trade Room, thanks so much. Take care. Good night, and speak soon. Bye for now.